India has worked hard to try to raise its profile on the world stage for companies looking to do business and investors seeking returns. But accusations of stock manipulation, accounting fraud against the Adani Group conglomerate by short seller Hindenburg Research now leading to a lot of questions about the credibility of India's market. And joining us right now for some broader context on what is happening here is Marco Papich, strategist at Clock Tower. It's been quite an extraordinary, as I said, saga to behold. I'm curious what you think the headline takeaway for you is in what we've been seeing. Of course, there have been lots of accusations against this company. They've denied them thus far, but that hasn't stopped the market from selling.
Well, you know, I'm a macro investor, so I look at this from a very top-down perspective. And what's been extraordinary has really been the performance of Indian assets despite a commodity bull market since 2020. So in 2021, in particular, something very interesting happened. Indian stocks absolutely outperformed the rest of the emerging market complex. Actually, India has been the best performing equity market like in the world, including the US, since 2020. And in 2021, this happened despite the commodity outperformance, which tends to hurt Indian economy because they're such a huge commodity importer. And I think that this really was about the anti-China trade. China started regulating its TMT sector, and all these large allocators flooded into India as an anti-China alternative, if you will. But the problem is that now, in 2023, we have signals that China is going to stimulate growth. As growth goes up, so do commodities. And that creates a very pernicious macro context for Indian equities, fraud or no fraud.
Marco, though, help me with this. And I think this is the biggest issue, which is fundamentally, do you believe the numbers that you get out of India? Do you believe the legal and sort of the laws, if you will, are there to protect investors? And do you believe that shenanigans are taking place?
So you're talking about governance, right? And a lot of investors, again, as China started to become less pro-business, looked to India as a governance alternative because it has presumably better governance. And my answer to your question is, look, I look at India as any emerging market economy. And so there will be a level of shenanigans that an emerging market investor has to be comfortable with. What I think is interesting is how that adage that emerging markets are a place where, you know, things like this do happen from time to time was kind of lost over the last 2 years as investors plowed into India as some sort of a beacon of hope in the emerging market complex. And I think you're starting to see that unravel a little bit. So it's not that India is worse off as the rest of emerging markets. I think what we're being reminded today is that India is an emerging market.
And therefore, you look at the Adani situation, you think what?
I think that it's merely a catalyst for a broader sell-off that honestly is probably 18, 12 months, overdue. Indian outperformance makes no fundamental fact. Look, India needs to invest more in its infrastructure if it's going to benefit from this friendshoring, onshoring, whatever shoring, thesis that everybody thinks is happening. There is absolutely no evidence that FDI flows into India have gone into manufacturing, have gone into fixed capital asset formation. And there's no evidence that India has gained market share at all. So you have a headline of Apple or some other company moving production to India. Those are just little anecdotal pieces of evidence. There's no macro evidence in the data that India is grabbing market share from China. And so I think a lot of investors just plowed into the country, as a panic trade over the last 2 years and are now getting whipsawed by the macro context, which is turning against them.